Hey everyone, welcome back to the next OpenCorp update. Obviously, further to our update last Monday night. Monday night seems a pretty good time to be bringing you the next update, given all the developments and various announcements over the weekend. So, Michael and James back again to give you the latest over the course of the last week. First and foremost, thanks to everyone for such a positive response regarding our video update last Monday. As we said, our role here is to be guiding you through what this means. Much more easy for us. We've been through downturns, illnesses, global financial crises, recessions, and so forth. And there are some key indicators that we see and that we need to understand as investors. But great to hear the information's been helpful. This is the second episode. We're planning another one or two at least this week, given what's been happening and what's likely to unfold this week. So thanks for the feedback. Glad it's been helpful. I might just kick off, Jimmy, if that's all right.
Yeah, just note we are in we're in different rooms for obviously our social distancing, which is important.
Awesome. So what we'll be going through today, I'll just clarify. We had some questions after the information we shared last time, so I'll quickly cover those off. Do you want to give an update on the building landscape, James, and what that's looking like?
Yeah, I can kick off with that now if you like. So we've had a number of questions from some existing clients that are currently going through build, and even some new clients as well. So just to give people some real clarity there as it stands as of today. So building and construction is classed as an essential service. They can operate obviously quite easily with it from a social distancing point of view, which is important. We've spoken to all our builders and they've got plenty of supplies for the next 6 to 8 months. There's no issue there. There is a bit of a lag potentially at some stage with fixtures and fittings, but given obviously the timing, and when I say lag, it's because of the quarantine. So many of the fixtures and fittings do come from China. So potentially there's like a 2 or 3 week lag time there, but obviously with proper planning, it definitely won't impact on build times or anything there. So definitely, as it stands as of today, there's definitely no issue with build times or from a construction point of view, which is good to know.
Yeah, and no changes to the OpenCorp guarantees around those side of things. Obviously, they're in place, giving all of our clients that peace of mind. So maybe I'll just start with some of that closing the loop from last week. So. We had some clients, especially those that are interested in the data and the detail, wanting some clarity and I guess clarification just around those major global events that we talked about last time. SARS, swine flu, the recession, GFC, Asian financial crisis, etc. So the impact that they had on property markets. So let's test my technical capabilities here. And I might start with this one, given that we're talking about health. So effectively, what we've got here is the nominal property price index Australia-wide, going back to the early 80s, and the major kind of health incidents over time. And you can see the impact, or in most cases, relative lack of impact of those things on property prices. So a couple that we mentioned last week. So we talked about SARS in 2003. That's just here. Obviously, property was on an upwards trajectory. That continued to occur. Swine flu came in, GFC time, and clearly the recovery was pretty rapid after that. The Zika virus was the one, I guess, lately in terms of potentially impacting a large number of people and exposing a significant portion of the population to risk. In 2016, we saw a very small period of plateau in prices after that, and then again a pretty quick recovery. So on the health side, that's what we were talking about. And if we have a look at the world events, we can see here, going back to the early 70s, what we're talking about here. So again, if we look at some of those key ones, this was the recession that we had to have in the early 90s. Yeah, and that was obviously after a major upswing. This period of plateau here around the Asian financial crisis, late 90s, as we said. Once we had that at the bottom, again, relatively speaking, fairly rapid upswing. Impacted by September 11, again, once that happened, very rapid upswing. And that kind of bubbled along through normal cycles through to the GFC, just here. Obviously correction, once the correction happened, the upswing that we talked about. So that's the graph and the data around house prices that we were referring to last time. So hopefully that helps clarify that. Mm-hmm. The other point really around the rental demand. So we talked last week about how in periods of uncertainty, the rental demand can stay high and even increase. Maybe we can clarify that as well as we could. So what we meant by that is rental demand is high and across the board, and especially so at the affordable price point. So you know, most people, especially family tenants, can afford that $400 to $450 a week or thereabouts, which is the area that we play in. That mitigates our risk. Also helps kind of understand why through some of these other downturns, you know, personally, I didn't have any vacancy during the GFC, for example. The reason why we can maintain that high rental demand and even have rents increase a little bit is because anyone that's looking to buy in the current landscape is probably more uncertain than what they normally would be, maybe around job security or what the market's going to do. As a result, they hold off. Therefore, they need to continue renting. So that's what we meant around that strong rental demand through periods of uncertainty. Anything to add on that, James?
No, I think you're spot on there. I mean, we'll know more in the coming days, which we'll touch on shortly. Yeah, so we might just cover that off because we've had a couple of questions already over the weekend and this morning with regards to tenancy and the ripple effect if tenants don't have to pay their rent. We just want to, we'll have more on that later in the week, and the reason for that is there's actually a national cabinet meeting happening tomorrow night. It's Tuesday night, to discuss the whole rental landscape and what their obligations are. But what we know right now is if you've heard any comments around, you know, tenants don't have to pay their rent, we just want to put some qualification around that. It's not an expectation on landlords to just provide a free pass and not have rent payable. Basically, what it was intended to mean is that there's likely to be flexibility afforded to tenants in the case of job loss or a significant cut in their working hours. But just like there's been government stimulus provided as a result of government policy and flexibility provided by banks in terms of government policy around small business owners, we would expect the same, you know, to come out of the meeting tomorrow night. So if a tenant can't pay the rent due to job loss, for example, then we're not expecting that will just be on landlords to foot the bill with no rental income. Given it is government policy, there's likely to be significant government stimulus in terms of income replacement that's already been announced, and or flexibility for landlords with regards to mortgage repayments to banks based on similar government policies that have been announced in the last 48 hours to 7 days as the situation has unfolded. Okay, so definitely stay tuned for that. We definitely expect that the next update will be Wednesday or Thursday morning, depending on when the outcomes of that are known and clear, and we can provide you some concrete feedback and update. But probably speaking of stimulus, the last thing that I wanted to touch on today was out of an interview on Saturday. Actually, I interviewed Andrew Wilson, who some of you may have heard of. He's a well-respected, long-term, very experienced property chief economist. He's been the chief economist for Domain and other industry bodies.
So highly sought after. We had a chat for about an hour and a half, and he was talking around the stimulus that had already been put in place and the broader picture on where Australia was relative to other first world countries in terms of their ability to provide stimulus. So, as you know, we like being a voice of reason in amongst the hysteria that's going on. A few key points that I thought might just be relevant to touch on. The business owner one that I mentioned, where they don't have any requirement to pay mortgage repayments and/or business loan repayments for the next 6 months. I mentioned the income support, which can be up to about $5,500 per month. Again, depending on different circumstances and how people have been impacted, but that's a pretty substantial tax-free payment that equates to a fairly strong annual income in that situation. And the third one, more generally from a national perspective, was while we were borderline surplus or not prior to the coronavirus pandemic, what Andrew was talking about was that America and other first world countries had provided stimulus that equated to 4% of their GDP. So obviously media outlets will publish big numbers because it sounds great and has impact, but in percentage terms, it was 4% of GDP. The government stimulus to date on all of these significant measures has been in the range of 9 to 10% of Australia's GDP. So clearly, there's still some evolution to play out with COVID-19, but everything that we're hearing from the government is supporting their rhetoric that they want to be supporting the economy, supporting Australians, and underwriting flexibility with regards to things like rental income, wage impact due to unemployment or potential unemployment, and also mortgage repayments. So the government's throwing the kitchen sink at this stuff. That gives us a lot of confidence as investors that we're not going to be left out in the lurch, and we can continue with our long-term plans and long-term strategies, knowing that in the short term that we're protected. So I'm not sure if there's anything else that you want to add around that, James. The only thing I'll finish with is that Andrew was very clear that when we get to the other side of this, there's going to be a big inflationary impact in terms of price growth as a result. And what he referred to as part of that was the Australian government has a track record of appealing to Australians' love of property with regards to economic stimulus measures in terms of leading that recovery. Case in point, through the GFC was the 32,000 first home buyer boost for people that built homes. Construction is the second biggest employer in Australia. Therefore, that fueled the growth of construction, fast-tracked the return to the economy, retail benefit as a result of white goods and appliances and so on. So we would expect something similar to happen. The other example was he gave that the Australian share market has done very little. He was talking about 4% growth from the peak pre-GFC to today, whereas the US stock market's seen dramatically larger increases over that time, all due to the inflationary impact of extra money being in circulation through the American economy as a result of their economic stimulus provided in response to the GFC. So again, everyone's situation is going to be different. Guys, the phones are on, everyone's calling us. So please be patient, we'll get back to you as soon as we can, but keep calling us because we can guide you through what this means for your individual circumstance. But let's ride out the short term, long term. I'm sure there'll be some upside. That was it from me. Jimmy, anything that you wanted to add?
No, not really. I mean, I guess the important thing during these times is to continue to make decisions, especially from a financial point of view. As emotions swing and people tend to stop making these important financial decisions. And I think it's important, that we understand that this volatility, is here to stay for some time. And we want to do our best to make decisions. Pure panic about our finances is not the right, not the right response. But IGA is, pure optimism either. I mean, we need to markets are going to overreact, and then they're going to come back, and we just need to make sure that our portfolios and everything are aligned to take advantage of what's coming in the future.
Yeah, great. So just one final point to finish. I'm sure there'll be a lot of curiosity and interest in the interview that I did with Dr. Andrew Wilson. I know I learned a lot from the chat and some of the insights that he had. So we'll just get that formatted and look to be able to make it available towards the end of the week. For all of our clients, we are planning on using it in some other ways in the market, so we would ask that you don't share it widely. We're happy to share it to keep you obviously informed and up to date with the latest information. But yeah, it'd be great if we can kind of keep it within the immediate OpenCorp family, at least for the short term. But we'll get that out. No doubt we'll be in touch again this week. And thanks again for tuning in. Any questions, let James or I know. We're happy to help.
Thanks, guys. Keep calling, okay, and we will get back to you. So really appreciate the communication, and let's keep it up.
Stay safe.
Thank you.